Next guest's latest piece outlines how milder inflation numbers could open the door to a possible September rate cut. Joining us now, Nick Timiraos, Wall Street Journal chief economics correspondent. Nick, it's good to see you. Good morning.
Morning, Joe.
What's your count? How many friendly numbers do we have now on inflation after those tough ones at the beginning of the year?
Well, obviously, the last two, you give them an A or an A plus. But I think the big reveal this week, Joe, isn't so much that we have to get straight A's anymore. It's that a couple of B's are actually okay, and that's because of what's happening in the labor market. And that's what makes this different from some of the optimism or expectations around a rate cut in the first quarter of the year, when it was really just being based on inflation being better, because now you do have the unemployment rate creeping up, obviously still at a historically low level at 4.1%. But better inflation with the unemployment rate going up, I think, is a different scenario from better inflation with the unemployment rate going down or staying, below 3.5% or something like that. So that's what's changed. Chair Powell in his testimony pivoted this week. When you're focusing on both of your mandates again, to me, that's a real pivot, as opposed to the kind of accidental or confusing fake pivot that we got at the end of last year. And so that was really the story this week, was that Chair Powell is focused again on achieving the soft landing, sees a bigger runway to do it, and is talking about a cooling in the labor market. He said that again and again. And so, that doesn't require tea leaf reading or whispering. He's saying it out loud.
Still maintains that we're in restrictive territory. Nick, do you think that the action in the NASDAQ causes anyone to really wonder how restrictive we are, or whether financial conditions are actually, able to shake off wherever we are on Fed funds right now? I mean, things are still pretty frothy in a lot of areas. Not so much in other, like you said, it is bifurcated. Not so much in other areas, but we're still rocking and rolling with the NASDAQ.
Yeah, I think a lot of commentators probably put too much attention on the equity component of financial conditions. So they'll say, oh, well, the stock market went up, financial conditions eased. I don't think that's the way that a lot of people at the Fed are thinking about it. I mean, let's look at the housing market. You see mortgage rates now, yesterday they came down below 7%, but for most of this year and for the second half of last year, we were looking at a mortgage rate above 7%. And so you have to wonder, how is that actually stimulating any increased demand for housing, for construction? It's not. And so I think, these moves in the equity market matter over time, of course, because price setters and wage setters will make hiring and investment decisions based on them. But I don't think that's really looked at quite as much by the Fed as the way sometimes commentators hold it out.
Nick, last week the renewed emphasis on the unemployment picture struck me as well. Do you think the market is underpricing this risk that, he said there are two risks now. It's inflation as well as the jobs market. Do you think the market is underpricing in that, the 90+% pricing in of a rate cut in September and no rate cut beforehand? I mean, do you think if we have a tick higher, significant tick higher, that a rate cut could actually be sooner, or the path could be steeper or decline more quickly in terms of rates because of the employment picture?
It's certainly possible. I mean, it's hard to see how you change the pricing for the July meeting, just given, there's not going to be that much data. There's not another payroll report. I guess you do get a couple of unemployment claims readings. I think the big development for July will be on Monday when we hear from Chair Powell. He's speaking in Washington. And so that's really his last chance to set expectations around the July meeting. I think, the big debate is most likely to be at the July meeting over what are you going to do in September? How much do you set the table for a cut in September? They have been pricing their flexibility, so maybe they don't want to lock themselves in with changes to the FOMC statement that really put, September kind of really well pointing to September. But at the same time, you're starting to hear from some of the doves on the committee Austin Goolsbee last night, for example, saying, look, this is what we wanted to see. Inflation's on a path to 2%. If you think that policy is restrictive, if you're seeing evidence of that, if you think that the elevated inflation you have right now reflects lagged, catch-up pricing on shelter and things like that, and if you think the labor market is no longer a source of inflation heat, then it does raise the question, what are you waiting for? And so I think that's kind of where the trick is going to be in July, is if you're saying, everything's okay to cut, well, why aren't you doing it now? What are you waiting to see? And so I think that's the big question right now.
Nick, when I hit up, I was going to take credit for WikiLeaks, but when I hit it up, your Twitter account on Google, your Twitter account does come up if you hit up WikiLeaks, and then something about Nicki Minaj. So which is it? Is it you, or what's really happening? Who came up with it? Can I say I came up with that? Or how long have you heard that?
You can take credit for it. I have no idea who came up with that.
It's really good. It's really good. You don't want to go to jail, I don't think. He's out now, I think. All right, Nick. He doesn't. He's not very frivolous most of the time. He's very serious. Have you seen that?
Well, look at what he covers.
Exactly. Nick Timiraos, thanks. We always like having you on and getting. I think the Nick Whisperer is Fed Whisperer.
Fed Whisperer.
It's pretty good. Yes. All right.